Guests and online friends, good afternoon. I am Casey Kwok, Chief Executive Officer of the Academy of Finance. Welcome to this expert speakers series co-organized by the Hong Kong Institute for Monetary and Financial Research and Hong Kong Academy of Finance.
Welcome to this webinar under the Expert Speakers Series, co-organized by the Hong Kong Institute for Monetary and Financial Research and the Hong Kong Academy of Finance. I'm Casey Kwok, Chief Executive Officer of the Academy. Today's webinar will be conducted in Putonghua with simultaneous translation into English. The language selection button is right below the webcast screen.
The topic of today's lecture is China's property sector, transformation and policy choices. The property sector is very important to the economic and financial stability of China. In the past 2 years, property enterprises experienced unprecedented difficulties in their operations. The core problem is that the leverage ratio and debt ratio are too high. In the short term, how to resolve the debt crisis of property enterprises and achieve a soft landing of the property sector is very important to stabilize growth, employment, and finance. In the medium and long term, how to guide the consolidation of property enterprises and establish a new model of real estate development, and how to make sure there is good policy coordination. This is an urgent issue to be solved. Today, we are very honored to have Ms. QIN Hong, Senior Research Fellow, National Academy of Development and Strategy of Renmin University of China, Director of the Urban Renewal Research Center and former Director of the Policy Research Center of the Ministry of Housing and Urban Rural Development, to share her analysis and insights with us. Ms. Qin, greetings. We have also invited Dr. WANG Tao, Head of Asia Economic Research and Chief China Economist of UBS, to moderate this discussion. Both of them are experts in researches on China's economy and real estate industry for many years. Dr. Wang, greetings. Today's webinar is taking place in an online-offline hybrid mode. In addition to those who attend this seminar online, we also have on-site guests, including executives from Hong Kong's financial sector and students from the Academy of Finance 2022 Financial Leadership Program. We are also honored to have Mr. Edmund Lau, Deputy Chief Executive of the Hong Kong Monetary Authority, to give a welcome speech later. Before we start today's webinar, let me remind you of some housekeeping rules. We will be video recording today's seminar, and the video will be uploaded to the Academy's website and YouTube channel. We have reserved time for Q&A session. You can submit your questions in the Q&A box on the right side of the screen. The views and discussions in today's webinar are the personal views of participants and guests and do not represent the views of their respective organizations nor the views of the Hong Kong Monetary Authority, the Academy of Finance, the Hong Kong Institute for Monetary and Financial Research, or their boards of directors. The webinar begins now. First, let me invite Mr. Edmund Lau, Deputy Chief Executive of the Hong Kong Monetary Authority, to deliver a welcome speech. Mr. Lau, please. Good afternoon. Ms. Qin, Dr. Wang, distinguished guests, online friends, good afternoon. Welcome to the Expert Speaker Series co-organized by the Hong Kong Institute for Monetary and Financial Research and the Academy of Finance. This webinar focuses on a topic of great importance to the Chinese economy. That is, China's property sector, transformation and policy choices. Since the reform of the urban housing system in 1998, China's property sector has undergone rapid development for more than 20 years and has made tremendous achievements. Urban housing conditions have been greatly improved. From 1998 to 2021, the annual investment in property development grew from 360 billion RMB to 14 or almost 15 trillion RMB, an increase of nearly 40 times. The GFA sold of commercial housing increased from 120 million square meters to 1.79 billion square meters, an increase of nearly 14 times. Sales of commercial housing increased from 250 billion RMB to 18.2 trillion RMB, an increase of nearly 72 times, with an increase of 490 million permanent residents living in urban areas. The housing area per capita in urban areas has more than doubled from 18.7 square meters to 38.6 square meters in 2020. This is truly the ideal of the Chinese poet Du Fu of the Tang Dynasty, who said, "How to get 1,000 big houses in order to shelter all the people from the cold and make them happy." The property sector has become the pillar industry of China's economy. According to the National Bureau of Statistics, the value added of the property-related service industry was 7.5 trillion RMB in 2020, equivalent to 7.3% of GDP of that year. Broadly speaking, the contribution of the property sector to GDP should also include indirect contributions from other related industries. Professor Rogoff of Harvard University estimates the contribution of the property sector to GDP reaching 23.6% in 2020 based on the input-output table. The property sector and its related upstream and downstream industries in China absorb a large number of employed people and increase the income of residents. 5.25 million people were employed in the property sector, and 53.67 million people were employed in the construction industry in 2020, which together account for 7.8% of urban labor force. In addition, the property sector and related industries provide a large number of jobs and higher income for the remaining rural labor force. That accelerated the urbanization process. Land sale and tax revenue related to the property sector is important income source of local governments. In 2020, the total revenue of local governments related to the property sector was 10.4 trillion RMB. Of this, 8.4 trillion RMB was from land transfers, and 1.97 trillion RMB was from real estate-related taxes, almost 2 trillion. Together, they accounted for 53% of local government's revenue, fiscal revenue. In terms of its contribution to the development of the finance sector, the property sector is an important, or real estate is an important collateral that has contributed to the expansion of credit and economic development. Property loans accounted for 44.8% of new loans at the peak. In the past 2 years, the decline was faster. The proportion of property loans to the total loan balance was 26.5%, according to the data of February 2022. Among that, the balance of mortgage loans accounted for 19.3% of the total loan balance. The rapid expansion of China's property sector over the past 20 years played an important role in driving the global economy. And the November 2021 issue of the British Economist described China's property sector as the most important one in the universe. As China's population ages and economic growth slows, it is difficult to sustain the high-speed and sloppy development modes of the real estate industry in the past. And the development of the whole property sector is facing a severe test of transformation. In the past, the property sector in mainland China has followed a high debt, high leveraging, and high turnover development model. The accumulation of a large amount of debt affected the financial and economic stability. The aging population, slowing economic growth, and tightening credit are fundamental factors that have led to cash flow difficulties and debt defaults of many real estate companies, especially those private property companies. Recently, there has been some relaxation in policy. How to construct a new model of property development and how to guide the property sector to a soft landing is a very important and urgent issue for China's economic, financial, and social stability. Today, we are honored to have two experts who have studied China's real estate and economy for many years. Their analysis will definitely help us understand in greater depth the transformation and development of China's property sector and will bring us a lot of insights. Finally, I would like to wish you all a very successful seminar. Thank you. Thank you very much. Thank you for the introduction by the two leaders. Thank you, HKIMR, for organizing this event. I am very honored to be here, to be the moderator, and I will ask Ms. Tin to analyze the development of China's property sector. Just now, the leaders had already given a clear description of the history of development. And so I think we should start from the short-term credit market and also an issue of big concern to the credit market. So in the second half last year, at that time, according to the Wall Street report, the Lehman era in China might have come because of a big downturn in the property sector. And this year, policies have been relaxing. And in February and March, in terms of construction and sales, there was sign of improvement. But in latter March, there was a downturn again. And in May, concerning sales and new construction, the downturn was even bigger. So given this current circumstances, I would like to ask Ms. Tin to explain and analyze for us. Well, for this round of deep adjustment in the property sector, when are we going to see the trough and when can it stabilize and improve? Well, for this year, when it comes to sales and construction and investment, how much growth will there be? Okay, thank you, WANG Tao. Thank you very much for the invitation from HKIMR. So I have this opportunity to share with you my views concerning China's property sector and market. Just now, WANG Tao asked a question. Well, it is an important issue. Right now, if you look at China's property sector, it is now experiencing a difficult period. If you look at the statistics, apart from positive growth in GFA for sale, for all other metrics, they show negative growth. And the negative growth is to a big margin. And I don't know whether you are aware, since the reform of the system, actually, GFA, in terms of supply, has never seen negative growth. And this year, in January to May, we can see that there is a negative growth in GFA supplied, and all other metrics showed negative growth. So it's true that the market is rather bad. There is a market downturn as a result for upstream and downstream industries and the overall economy. There was big impact. All along, I have been observing this market. I am doing analysis and research. Is it true that China's property sector is falling all the way? I have different views. I believe that China's property sector in April had already seen the trough. Well, I have prepared a chart. Perhaps you can take a look. Well, on the left, you can see this chart. The green bars are data according to National Bureau of Statistics, and it is the growth in GFA sold of commercial housing. And from January to May, it came down. However, if you look at the top 100 property companies, their GFA sold in April already stabilized, and in May, there was no further decline. So if we look at the National Bureau of Statistics data, if we look at the monthly data, monthly GFA sold, if you look at the right chart, this is the monthly GFA sold. In April, we saw the trough. And in May, well, that month sales had increased. So my view is that, yes, property sector this year was very bad. Last year, we saw historical high in the first half last year. So on a year-on-year basis, the situation is bad. However, in April, the market did not continue to decline. Well, it started to stabilize. So Wang Tao asked, when was the trough of the market? I think that April was the trough. Well, if there is no new surprise, for example, if there is no resurgence of the pandemic, or if there is no unforeseeable factor, then I guess the trough was seen already in April. But then, does that mean that the market can recover very quickly? I think that will be difficult. There are three main reasons. First, at present, if you look at market demand, well, expectation is still not stable. If you look at the market, well, if there are defaults by property enterprises, then there would be panic in the market. People are worried that they would be buying some property units that will actually fall apart, that will not be completed. So in terms of GFA sold, up till now, there is still negative growth at around 20% in the whole China. But then for sales of completed property units, well, there is positive growth. There is no negative growth. The negative growth only happened to pre-sale. So for completed properties, well, the sales is better than uncompleted property. And for central enterprises, the sale is better than private enterprises. So the second reason why the market cannot recover very quickly is that in the past few years, well, at present in the market, the main demand, well, apart from some reversal of, for example, second-hand property units, well, basically the main demand is from rigid demand. And if you look at rigid demand, well, basically they are first-time buyers and so on, and their income is not really very stable. And so, well, the demand is still there, but then their propensity to buy property is being delayed. So the release of demand is delayed. It won't recover that quickly because those people's income is not stable. Number three, well, if you look at sales, well, if there is no more big downturn after April and May, well, if you look at many private property developers, they still experience a lot of pressure in debt repayment and in liquidity. So in terms of new construction and development investments, well, there would still be some lagging behind. Well, because these companies still need to repay their debts, they won't invest in new projects very quickly. So even though we have seen the trough, but then there won't be a very fast rebound. That is my judgment. Just now, Wang Tao also asked, this year, how do I see overall sales, investment, and new construction and other metrics this year? Well, I think it is difficult to come to a judgment because if you look at the market policies and external environment, the situation is rather gloomy. I think I can't say it is gloomy, but then there will be change for sure. So if you look at the present situation, my personal judgment is that this year, if you talk about GFA sold, that would be a negative growth of 10%. For sales, negative growth of around 20%. That is my judgment. And for new construction, I think this year it is still not good. This is mainly because developers still experience big funding pressure and liquidity pressure. So for new construction GFA, there is still negative 20%. Right now, it's negative 30-odd%. For the whole year, it will narrow down to about negative 20-odd% in terms of new construction GFA. But there is a metric, an indicator that may turn positive. Which one? It is the development, property development investment. What I mean is, well, why did I come to such a judgment? If you look at the composition of property development investment, land purchase or land cost accounts for 30%. Now, I have prepared a chart on the left-hand side. This is since 2018. So land cost accounts for around 30% of total property development investment. And the second one is construction investment. And that accounts for around 60%. These two added together is 90%. So in other words, if these two metrics can stabilize, then this year for property development, it may be possible that there won't be negative growth. So how can we make sure that land purchase cost this year can show positive growth? I think the critical point is in the land market this year. I think policies about the land market will be more friendly this year. Local governments, well, I think land sale revenue is meaningful to local governments. So this year, local governments will sell some good plots. Then what does that mean? That means that this year, the land price will not come down. And the actual situation is exactly that. This year, from January to May, we're looking at all the national statistics. The indicators look bad. But if you look at this chart on the right-hand side from January to May, well, if you look at Tier 1, 2, Tier 3, 4 cities, well, land price had not come down. Even though the land supply is coming down, but then land price has not fallen. One major reason is that in various cities, many good plots are being made available. The second point is this year, if you look at land policy, it will be more friendly because local governments will allow property developers to make a profit from buying land. So in other words, the difference between land price and housing price can improve. So how to enable property developers to make a profit? One major way is to reduce non-residential ratio and also ratio of security or affordable housing and so on. So the ratio for sale will go up. Then property developers can make a profit. Then the property developers will accept a higher price. Well, if land price does not come down and if the ratio for sale does not go up, then how can property developers afford that? Well, saleable area can go up, and then as a result, profits can improve from last year. Then this year, the land cost may show a positive growth as a result. Then if you turn to the construction costs accounting for 60%, well, the construction investment mainly relies on GFA construction. Well, what is the situation about GFA construction? Well, from January to May, negative growth by 1%. So that means this year, even though there is the first time that we see negative growth, but then we only saw the historical peak last year, and we are only slightly worse than last year. How many property units were sold last year. Well, 1.79 billion square meters were sold, and for residential, 1.51 billion. And this year, they have to be delivered. So even though construction GFA showed negative growth, this year there is still the need for construction. So it is only lower than last year. So this year, I believe that property development investment may be positive. These are my views about these indicators. So my judgment is based on the current condition. So in the future, if there are changes in the policies and environment, then I may have to adjust my judgment or change my judgment. Thank you, Ms. Tien. I think your analysis is very detailed. You have shared with us so many data and charts. Well, so I have derived a conclusion from your analysis. Now the situation is rather bad, but then we have already seen the trough. So even though new construction may come down 20%, it is in line with UBS's estimates. But in terms of investment, we may see a positive growth. So that means construction, GFA construction, and also land price will not come down. Better plots will be sold. All these can support price or investment increase. So actually, concerning the future and also policy expectation, if there is an increase in construction GFA from the current negative growth situation, then that means that given the decrease in new construction, well, sales in the second half may increase. It will be increasing faster than new construction. Besides, for developers, I think that liquidity will also improve. Then they will have funds or capital available to increase investment and construction. So now I would like to ask you the next question concerning your views about future policies in the property sector. Since the end of last year, well, property policies have been relaxed or adjusted. And in the past, actually, the degree was small. And actually, there is strengthening of regulation. For example, mortgage rate has been lowered, and local governments may make adjustments to policies. And for property developers' cash flow management and also prepayment management, there would be adjustments. Well, looking at the current policies, do you think the policies are strong enough to recover the market, or do you think that there will be other policies that will be coming? We have not seen very strong effect. So is it because there is still the need for some more time, or do you think there will be new policies coming out? Well, concerning policy adjustment, I think it has happened in many places. There are more than 100 cities where policies have been relaxed, and the relaxation started from Tier 3, 4 cities towards Tier 2 cities. And now, factors affecting market recovery are complicated. Some are related to policy, some are not that related to policies. For example, if you look from the perspective of home buyers, well, it all depends on whether they have the propensity to buy, the affordability to buy, and so on. Now, policies have been relaxed. So in terms of market access, well, now there are the necessary conditions already. The situation has been opened up. But then in terms of capability and affordability, now in some places there are subsidies for home purchase, so it is quite supportive. But we still need people's propensity or desire to buy. And right now, well, we have to look at the home buyers or property buyers and whether they think that property price will continue to come down. Well, this is important, but that's not the only factor. We have to look at whether their income is stable, and after the pandemic, whether there will be change in their employment, and in the future, where will people buy properties and so on. All these issues have to be answered when time passes. So yes, there is policy relaxation, but then I think the decision to buy properties may be delayed. So overall speaking, I think whether or not the policies are strong enough, this is a comparative matter. So what should we compare that against? In the past few years, in various places, there are so many restrictions and also policies that are rather restrictive. But now, of course, the relaxation is not strong enough if you look at the degree of restriction in the past. And in the past, we have already gone through a clear downturn, for example, in 2008 and 2014. Comparing to those periods, I think the policies are not strong enough because the environment, the conditions are different. And if you talk about the degree that people are expecting, again, there is a discrepancy here. So if you look from property buyers' point of view, that's how they see it. From the government's perspective, I think since October 2016, well, there was control on property price, and the government had a hard time, really. They had introduced a number of policies and regulations. And now, of course, the overriding principle is that housing, properties are for accommodation, not for speculation. And in hot cities, in hot tier 1, tier 2 cities, there is a worry that demand will go up too much, and then there may be property price increase as a result. So when policies are introduced, I think the most important thing is to look at the relationship between demand and supply. In some cities, well, there is strong stimulus and there is inventory for like 3-4 months. And in some cities, policies are not that strong. That is because they only have a few months of inventory. And so it is not quite possible to introduce too strong stimulus, policy stimulus. So the local governments have to be responsible for any consequences of their policies. So overall speaking, if you ask about the outcome or effect of policies, I think at present, given this policy strength right now, well, we have seen this outcome. And are the outcomes up to our expectation? People's expectation is different. In the future, we have to solve 3 issues: propensity to buy, affordability, and market access. Well, in some cities, there may still be some room. And if you look at mortgage rate, it is still on the high side in some cities. For second-hand properties, the down payment requirement is very high, so it is difficult to upgrade your properties. In Beijing, for the second property, down payment has to be 80%, and property price is very high. All property units are priced at more than 10 million, and so it is very difficult for people to upgrade their properties. But different cities are different, and so in terms of policy adjustments, well, there is a lot of variance. Overall speaking, oh, sorry. Yes, please go ahead. Yes, please go ahead, Ms. Tin. Oh, okay. Just now you asked me how I comment on these policies or how I rate these policies. Well, 3 points. I think overall speaking, the adjustment varies based on different places. And secondly, we have to look at relationship between demand and supply. We can not only look at the short term, but also the long run. What if property price go up? Well, that is a big trouble to government. And number 3, we have to balance a number of factors. We should make sure that we are good on all fronts. Well, if you look at Changsha and Chengdu, property purchase and property rental are integrated. For example, in Changsha, purchase restrictions relaxation is combined with birth rate as a stimulus for people to give birth. So I think these are the 3 main points to look at. Okay, thank you. Just now, you said that policies differ in different places, and we would like to see multiple outcomes in policies. I think given the current situation and framework, what the government can do has been done already, and the situation is not comparable to the past. And you said earlier that for property demand, we have to consider propensity, affordability, and market access. So property policies are closely related to macroeconomic policies. In the second half of the year, if the economy starts to stabilize and recover, then if there is some good improvement in employment and wages, then people's propensity to buy property and affordability may improve. So this doesn't have to do with property policies. If the overall economy improves, then the property sector will also improve. Now, let's move on to a micro issue. Given the overall macro background, as said just now, we have seen unprecedented difficulty. Now, the CBRC and the central bank want to encourage companies to carry out merger and acquisition loans in a steady and orderly manner, focusing on supporting quality real estate enterprises to merge and acquire quality projects of difficult property enterprises. However, at present, state-owned enterprises and high-quality private developers do not seem to be active in M&A, and the possibility of some property projects falling apart is increasing. So how to reverse the current trend of default of property enterprises and downward property activity? After some consolidation in the future, is it true that the property sector will be dominated by SOEs mainly? Well, for this question, it's difficult to comment. I will try my best to share my personal opinion. It is true that default of property enterprises is the biggest problem in the market. If you look at gearing ratio of property companies in China, all along it has been high. Well, I have prepared a chart, so you can also check this chart online. In 1997, if you look at property developers' gearing ratio, well, 70% back then. And at present, in 2020, 80% or 76 to 80.7%. So it is already very high. So I'm thinking of one thing. In the past, why is it that there was no default or debt problem? And now there are these problems. On the surface, well, there are a lot of analysis. Well, last year there were the 3 red lines. And also there is a concentration of loans, and also there was some management regulation. I think policy is only a triggering factor. There are 2 points that people might not have paid enough attention to. Which 2 points? Number one, in 2015 or after 2015, property developers' financing usually is shorter than the return cycle. That started in 2015. Well, at that time, return on investment cycle is usually 3 years. That's the median. But then the debt term is usually 2 years. So that means there is a gap for refinancing. So in 2016, for Chinese property developers, well, they capitalized on policies and issued a lot of bonds and debts, medium terms, bonds, and so on. And financing has seen a peak. In that year, 1 trillion, more than 1 trillion, it's a record high. In October 2016, there was a new round of adjustment in the property sector. So property is only for housing, not speculation. And then bank loans have been tightened at that time. And then in 2016, at the end of 2016, around November, property loans accounted for 44.8% of new loan balance. After that, it started to come down. And right now it's, well, this year from January to March, it's 9-point-something%. And in terms of property development funding, bank loans in 2016 was 16%. It came down to 11% at the end of last year. So bank loans declined as a share. So the second point is offshore debt or bond issuance. For offshore bond issuance, comparing with onshore bond issues, well, companies only need to disclose the necessary information. So for top property developers, they are doing a lot of offshore financing, and that peaked in 2019. Here, if you look at the red circle, in 2016, that issue, if you look at the red part, it was onshore financing, and the yellow part is offshore, which saw the historical high. So this is based on the World Bank's report. And I guess it is rather accurate. So that's why I have taken that data for my chart. Starting 2015, there was a gap in refinancing. And for developers and investors, they did not pay enough attention. What is the second issue? In 2016 and afterwards, while developers have been increasing their leveraging, many people debated with me. Well, they said what I said is not right. So property developers had high debt, high leveraging, and high turnover. Well, they said high leveraging is equal to high debt. And then I believe that this is right for other industries, but for property companies, high leveraging, high debts are two different things. High leveraging, well, there are three leveraging. Financial leveraging, that means high debt. Okay, there is no problem here. But apart from financial leveraging, for Chinese property sector, there are a lot of non-financial leveraging, no interest-bearing, non-interest-bearing leveraging. For example, payables in 2009 and after that, source of funds of property companies, well, payables only accounted for 10%. But last year, if you look at their funding source, payables, that means debts, accounted for 26%. So that means there are a lot of construction costs in arrear or payables, a lot. Besides, they made use of buyers' prepayment to buy land. So after, well, or before 2016, that part was small. But then after 2016, in terms of leveraging, well, developers were engaged in a lot of non-financial leveraging. So as a result, leveraging ratio climbed up significantly. And I think that investors and companies have not paid enough attention to this. So I think policy is only a triggering factor. And apart from policies, why is it that companies are not quite active in terms of M&A? I think default is not only caused by policies. So the governments want to correct the situation, but then the outcome is not satisfactory enough. If you look at market orientation principle, there are things that cannot be solved by policies. So I can divide property companies into four types. Well, Basu Song and Shenbo also heard my views. I still stood by my view. I think there are four types of property companies. The first is very diversified in terms of their investments. So, for example, they are investing into water works, a few 10 billion, and some other areas, a few 10 billion. So in other words, they are very diversified in their investment. Are there many such companies in the property sector? Well, of course, there is not only one, but they are just very few. They may be exposed to risk. It is difficult to tell. And sometimes, even if they are exposed to a lot of risk, it is not surprising. For these enterprises, what kind of policies can resolve their problems? I think they are in a very exceptional situation. That's the first type. The second type is after 2015, 2016, they expanded their leveraging, they acquired a lot of land. Their own operating efficiency and their overall asset quality is not very good. And these companies are bound to see problems sooner or later with the 3 red lines and also with the government's regulation. Well, their risks are only exposed earlier. So based on market orientation principle, well, now the financial policies have been relaxed, but then the effect on them is not big because based on market-oriented principle, well, only good companies can thrive. So I think they can only think about disposal of assets, and there may be discount in the asset price as well. So their problems are very difficult to be solved. Sooner or later, well, these companies will have to pay a price for what they have done in the past. So that's the second type. So even with M&A policies, the outcome is not very satisfactory because no one is going to get involved. The third type of companies have not very good operating efficiency. Their leveraging is high, but then the asset quality, overall speaking, is not very outstanding. These companies also experience debt pressure, and sometimes they can't achieve turnover. The room for profit is also very small, and now they have hard times. For these companies, I think it is good for them to be acquired by quality companies so that they have capital to lower their gearing ratio and they can lower their financing cost. And quality companies can help them enhance their balance sheet efficiency. So apart from M&A loans, the 3 red lines and so on, well, I think equity financing over the past years has been in strict control. So far, it has not been relaxed. But then these companies need equity financing. For instance, PE, private equity. But so far restrictions have not been relaxed yet. So that's the third type. The fourth type of enterprises is that their operating efficiency is not problematic. Their gearing ratio is not very high. Their return on investment can cover their financing costs. Their asset quality is okay. But then right now, given the market downturn, they experience debt pressure. They experience refinancing pressure because the sales turnover is now slower, so the debt cycle is shorter than the turnover. So for these enterprises, right now, policy relaxation in terms of allowing them to issue debt and also the relaxation on gearing ratio will be helpful to them. So right now, for property enterprises, well, they experience problems for different reasons. And it is difficult to say, okay, we can just formulate one policy. For example, can we just solve the problem by doing away with the 3 red lines? Not necessarily, because companies experience problems for different reasons, and different policies will lead to different results. And you ask whether the property sector will be dominated by SOEs. Well, my view is this. If you look at the top 100 property companies in 2020, if you look at sales, SOEs and central enterprises account for 30%. Last year, 48%, almost 50%. This year, if we look at land acquisition, especially this year, 70% to 80% of land was acquired by SOEs and central enterprises. So this year, I think SOEs and central enterprises will experience an increase in market share. So for a certain stage, I think their share will continue to go up. However, overall speaking, all along, the property sector has been dominated by private companies. In 2020, if you look at all project registration and also actual property developers that have registered, there are around 100,000 companies. And how many SOEs are there? 1,133, around 1%. So if you say that the property sector will be dominated by SOEs, I think that is not necessarily the case, perhaps for a certain stage, but in the future, I think there will be a lot of opportunity for collaboration between SOEs and private companies. I see. Yes, your answer is very detailed. So why are there problems in property companies? You explained different reasons. And the conclusion may be that even if M&A is being relaxed or even if the 3 red lines are abolished, the problems cannot be all solved. And in a certain stage, SOEs may benefit from their financial condition, but in the long run, the property sector will not be dominated by SOEs, or SOEs may not have that desire to dominate the sector. Well, because of time, I will combine my next 2 questions into one. So can you give a concise answer? Yes. Okay, there are so many problems, high debt, high leveraging. All these are problems in the property sector. Then how should the sector be transformed? When you answer this question, can you also comment on the overall long-term prospect? For example, if you look at change in demographics, aging population, and so on, in the past, the high growth stage in the property sector was over. So do you agree to this point? Secondly, given such backdrop, how can property companies successfully transform? Now, if they cannot rely on other people to acquire them? Well, this is a good question. This is a question relating to the medium to long term. Let me talk about my judgment about future markets, and then I will talk about transformation. Transformation depends on our view about the market. A brief answer. Well, looking at the announcement of the recent census data, because the time period is quite long, and many people have been pessimistic in their estimates. For example, there is oversupply and there is control and regulation. Well, after looking into this matter, I think, well, there was some encouragement and some worry. In the past 10 years, if you look at the demand and supply in the Chinese property sector, well, in terms of demand, in the past 10 years, there is an increase of there is around 103 million new households and 50 million units, property units. So in other words, 153 million units. That is demand. If we do a discount to this demand, well, it is not entirely market demand. So 50 million units of demolition. So there is 103 million new households. So some want to upgrade their housing. That accounts for, that is 30 odd million. And then there is urbanization. If we discount that, some may be passive urbanization. So adding together, to be conservative in the past 10 years, new increase in demand from household is 120 million units. And last year, what is the supply? In 2021, supply was 117 million units. So that means supply over demand is 96%. There is not really excess supply. And if we look at housing area per capita, Many people said that right now it is very high. Well, in the cities, it is 36.5. In towns, 42.3. On average, for cities and towns, 38.6. We're talking about GFA. If we compare with developed countries, if we do a discount, then in cities, 29. In Japan, metropolitan area, Germany and France, if we compare with them, there is a shortfall, so there is still a room in the future. We talk about urban households. We did not work on the total number of households. Now, if you look here, there is still one more important indicator, that is self-ownership ratio. Over the past 20 years, in the urban area, self-ownership rate has been stable at 74%. This shows that in China, well, people attach much importance to the security of their housing. In the past, this ratio has been quite stable. And is it necessary for property companies to transform? Yes. In the past, we saw rapid growth, but then there was also big change in the external environment. There is market demand dividend from reform in the past, but that disappeared. And then from high urbanization in the past 10 years, there is an increase of new household of 110 million. And then there is an additional 30-odd million households, 36% increase. That is from urbanization. That is a dividend from population. Besides, labor force has accounted for a big ratio all along. The third dividend or bonus is from money supply. All along, M2 has been increasing double digits. The fourth bonus is economic growth. In the past, double-digit economic growth. But then now, the new normal is a single-digit growth. So there are changes to all these four bonuses. So property companies must transform. But how to transform? That is a new issue. Because of time, I cannot really comment on that. But I have prepared a report for the Academy of Finance. It will be uploaded to the website. It will give an analysis on my research findings on how property companies should transform. So that's all from me for the time being. Okay, thank you very much. If you are interested, please refer to Ms. Tian's analysis report online. Time is almost up, but I know that a number of audiences and participants would like to ask questions. So now I will pass the floor to Chen Hongyi. Thank you, Dr. Wang, and thank you, Ms. Tian. Our country is really too big. So when you talk about properties, there are always a few 100 million units in that magnitude. So, okay, now there is some time. I would like to ask Ms. Tian a few questions. First, let's invite from Bank of America, Managing Director and Head of Greater China Property Research, Mr. Carl Choi, please. Thank you, Ms. Tian. I'm happy to have this opportunity to ask you a question. Well, concerning demand and supply relationship, it seems that it is not as unfavorable as expected. So, okay, can you be more quantitative in the future, in the long term? In terms of new housing sales, what will be the trend in the coming 5 to 10 years? Thank you. Right. In 2021, commercial housing sales GFA would have seen a peak. 156 or 1.56 million square meters for residential. That was the peak already. In the future, it will come down. In the future, of course, it will come down gradually. In the coming 10 years, the average may be at 1.2 billion. Okay, second question. Head of Corporate Banking, Hang Seng Bank Limited, Mr. Angus Wong, please. Thank you, experts, for your sharing. Just now, I agree with you that in the past few months, there were different measures being introduced to defend the stability of the property sector, but it seems that it is not strong enough. The measures are not strong enough. So I think the biggest problem is about confidence. For financial institutions and the market, there is still not enough confidence. So what measures can the government introduce in order to recover confidence among the financial institutions and the market in the property sector? Well, I think right now, problems faced by the property sector are not only inherent problems. The problems have to do with the overall development. For example, overall income, employment, and so on. If you only look at the property sector itself, as I said earlier, for example, mortgage rate, if it can come down further, and I think there will be stronger support for people to buy properties so that people can have better affordability. If equity financing can be further opened up, then again, that would be meaningful to property companies. So, of course, there's the need for comprehensive consideration in terms of these policies. Next question. Managing Director and Chief Market Strategist, Asia Pacific of JP Morgan Asset Management, Mr. Tai Hui. Thank you. My question is, well, since properties are for housing, not speculation, well, based on your observation and research, for investors and buyers and the financial system, is there any change in terms of real estate being a main financial asset? Well, this is a very good question. In the past 20 years, since the year 2000 to 2020, if you look at Chinese cities, self-ownership ratio is around 70%, and in towns 80%. The average is 74% between cities and towns. I think properties are very important to Chinese households and families. So people like to buy properties. Our ancestors have been telling us to buy properties. Properties are like guarantees to families, security to families, not only in the cities, also in agricultural villages. So owning properties is very important. Right now, the leasing market, the rental market is being greatly developed. And to me, I think leasing to young people is something transitional only. So whenever people have the capability, well, people would not like to rent their home for life. Because of time, now let's take the last question from Mr. Wang Tao, please. Yes, thank you, experts. I am from Haitong International Securities Group. I have some questions. Well, in fact, those questions have been addressed to a certain extent. But then in terms of policy too, will there be more work to be done? Just now you said that there may be some tools and methods, for example, opening up equity financing. My question is, in terms of determination of policies, would there be more determination to reverse the situation? For example, in Nanjing, there are still policies on purchase restriction, but then, well, the market confidence is already very weak. So I have the feeling that policies are rather cautious. So the government doesn't want to introduce too strong measures. Right. The market wants policies to be stronger, but governments have to be accountable to the consequences of policy. So they have to consider different perspectives. Different people have different angles. Will the governments introduce stronger policies? It's difficult for me to tell. I personally think that there is the room for stronger policies. But if you talk about Nanjing, abolition of purchase restriction for second-hand properties. Well, I agree to that. Where Nanjing is in the Yangtze River Delta, which is economically quite developed, if purchase restriction is abolished, then everyone can go to Nanjing to buy properties. Then how many people will go to Nanjing from Yangtze River Delta to buy second-hand properties? And if you look at neighboring markets, what about them? If purchase restrictions are very relaxed in the central city, then to the neighboring cities, the killing effect of the market will be even bigger. So in Nanjing, overall development is not that it needs such relaxed policy. We have to look towards the longer term as well. In big cities, property price is still on the high side. We don't want to see that in order to stimulate the market in the short term, then we don't want to see speculation again, because that is going to do some harm to the overall Chinese economy. Okay. The property sector is a very complicated sector, and because of time, we have to thank Ms. Qin and Dr. Wang for their sharing today. And we will conclude our webinar here. Thank you very much.